So, when is the last time that your financial advisor asked for your tax return? That's a question that I've asked a lot in first client meetings, or what we like to call a discovery meeting, over the past 19 years of being a financial planner. And so, the answer that I get more often than not is my financial advisors never asked for my tax return. And so, one of the things I want to talk to you about today is here in the year 2022, where we see taxes going in the future and the tax issue that most pre-retirees and retirees are facing that they are completely and totally unaware of. You probably, if you're like most pre-retirees and retirees, you probably have a large portion, if not the majority of your investable assets saved in a pre-tax retirement account like a 401k or a traditional IRA. And those are phenomenal tools. And you did a great job by saving money into those because you got a tax deduction the year you put the money in. The money has grown all these years, tax deferred, so it grows each year without any taxation of that growth. However, once you turn age 59 and a half, you have access to touch those accounts without any penalty. However, when you do that, you're paying income tax at that time, regardless of what tax brackets are in our country, and regardless of what your personal tax bracket is. So, what's the problem here? Doesn't seem to be a problem. Sounds like a pretty good deal. You get a tax deduction for putting the money in, the money grows tax deferred, and then you pay taxes when you take it out in retirement, and you're probably assuming I'm going to be in a lower tax bracket in retirement anyway. So again, where's the problem? Well, it looks like this. At age 72, whether you want that money or not, the IRS mandates that you pull money out of these accounts, okay? And so many retirees find themselves in a scenario where they might not necessarily need money out of their IRA, but the IRS makes them pull money out at age 72. And if they've got $1 million, $2 million or more in these pre-tax accounts, the first required distribution at age 72 could be $60,000, which sits on top of that couple or client's Social Security and pensions. So for example, if a couple has $40,000 of Social Security coming in, $40,000 of pension, as married filing jointly, that couple would be in a 12% tax bracket. But if they have then 60,000 of RMDs or required minimum distributions from their 401k or IRA thrown in there, now all of a sudden they have 140 instead of 80,000 of taxable income, and they go from the 12% bracket to the 22% bracket. So RMDs, without a doubt, are the biggest tax surprise for most retirees in the country. And it's because people forget that they can't take from their IRAs and these pre-tax accounts whenever they want. At age 72, the IRS basically states, we've never taxed this money, it's time to start taking, we're not waiting until you pass away. So I couldn't count how many times that I've had this conversation with a new client that we're onboarding who's never even thought about this. They're in their 50s or 60s, and they've never even thought about the ticking tax time bomb that they could be creating by having all of their retirement savings in accounts that are going to be 100% subject to income taxes. So RMDs can create a big problem. Pair that with the former comptroller of the United States government. Comptroller is the nation's CPA, has been on record many, many times. And he's been on record saying that by the year 2032, we're going to be back to 1970s, 1980s tax brackets. What does that mean? They're basically double what today's brackets are here in 2022. So if you couple these two facts together, most Americans have most of their money where it's going to be totally subject to income taxes, and we could see ourselves, and if you look at the signs of an underfunded Social Security program, underfunded Medicaid, underfunded Medicare, most of the social programs are underfunded, that you got to take from these IRA accounts and 401ks, and we're in a rising tax environment, it can create a ticking tax time bomb for most retirees. So this is something that we talk to a lot of clients about. If you would like to talk more about this in your own situation, reach out to us.